Hey, this is Justin with DayTradeTheMarkets.com on Monday, November 18th, 2013. And clearly the markets, I wanted to look at the Nasdaq and the emini S&P today. They were clearly, these index markets were clearly controlled by sellers for the majority of the day. And I wanted to talk about how you handle that when we're in a situation where the bigger picture bias is so strongly up. Obviously, we're near all-time highs. So going into the day, you're thinking about getting long, but on a day like today, that could get you in trouble for to some degree because the day itself is controlled by sellers. So let's talk. What we call that is a conflict situation, and so. The idea here is that the bigger picture bias, which is looking at the last few days, last few weeks, kind of a bigger picture idea, and then we look at the short-term bias or the structure of the market right now. And obviously, the bigger picture bias is up, and so if the short-term structure of the market is also up as well, everything's in alignment, and you've got a really nice situation where you're looking to get long. However, today, the shorter term structure, which I'll talk about in a second, was down. So we've got a conflict situation where bigger picture and shorter term structure are not in agreement. So how do you handle that situation? Well, one is you wait until buyers take back over the market if you're more focused on being in line with the bigger picture bias, swimming downstream, so to speak. If you are more of a short-term trader, you can certainly, get short on a day like today that's clearly controlled by sellers. If you do that, you have to know that you're swimming upstream, so to speak. You need to be more nimble. That trade needs to go in your favor pretty quickly. You probably don't want to have as large of a target as you might otherwise have, and so forth. So that's what we call a conflict day versus an alignment day, and that's what we had today. And just to illustrate that, obviously, it would be pretty simple for most people, I would think, to understand that the bigger picture bias is up, obviously, as we're near all-time highs day after day here. But you can see in our short term, and this is a Nasdaq 2-minute, you can use this on any market, any time frame, but what you'll see here is that the first major structure of the day is what we call a level 3 or extreme selling aggression bar, and that is telling us very clearly that the first shot of the day is fired by the selling side. And so we ask ourselves, can the high of that bar hold, and can the low of that have some follow through? And that's what happens. And the same thing here with this next wave of selling. Whenever you have two of these level 3s in a row, we tend to look at them as kind of a wave of selling. So we ask ourselves, can the high of that hold? And that certainly is a nice place to look at it short. Can we get some follow through lower? Which didn't happen until later in the day, but we certainly had that. And then again, when this thing sells off again, it's just kind of that waterfall effect where we sell off down toward expected support area. At the end of the day, start to get a little bit of a pushback, but certainly this is a day that's clearly controlled by sellers. You can see there is no the only level 2 or higher buying bar that we have was early in the day, and you can see that got rejected right away. You can see we tested its low and then bounced up to the high, but we had no follow through higher, and then the low was taken out. So the only buying structure we had was rejected, and all of the selling structure had follow through. So that's telling us clearly sellers are in control of this market. So again, if you want to be more of a short-term trader, be nimble, be ready to, because you're against the bigger picture bias, be nimble, and that's okay. Or you just simply stand aside and wait for buyers to step into this market, which did not happen at all during the day. Hopefully that makes sense. It's a very similar look here in the ES, just apples to apples. Look at a 2-minute chart. Again, you can see where our first major structure of the day is that level 3 selling aggression bar. We actually got 2 in a row. That sets up a potential what we call sweet spot trade, right where these two overlap, right in there. Or getting short toward the high of the next one. You can see this one had a little bit more push by the bulls, as this one buying structure did have some follow through, and then this one finally got rejected, and then you can see again that we get some pretty strong selling here toward the end of the day. But again, that's just telling us we know the bigger picture bias is up in these index markets, but the bulls were not in control of this market. And you can see that until that high of that level 3 is taken out, or until we get some strong buying that comes in, and we didn't get any till the cash close there, you'd want to be real careful being on the long side on a day like today. So hopefully that makes sense. Again, that's the idea of conflict versus alignment, and obviously the ideal, and when this happens, it's great. When the bigger picture bias lines up with the short-term structure, it's a great situation, very high edge. When the bigger picture bias, however, does not line up, you just have to be a little more nimble or be willing to stand aside and wait for it to line up. So hopefully that makes sense. If you have any questions about that, let us know, and we'll talk to you soon.